Thank you everyone for joining on our rainy morning here in Hawaii. Aloha and welcome to Our Homes, our housing webinar series. Today's discussion focuses on a question we're seriously addressing here in Hawaii, how we can better use public lands to create more housing for our people. Today we will learn about a public entity that has done just that in Vancouver, Canada, the University of British Columbia. UBC is widely recognized for its innovative land development model, developing university land into complete communities that integrate housing affordability, sustainability, and revenue generation for the university. This model has been called a river of gold, generating over $1 billion for the university's mission over the years. Today, we are honored to welcome Michael White, Associate Vice President for Campus and Community Planning at UBC. Michael oversees the strategic planning framework for both UBC's Vancouver and Okanagan campuses, with a focus on reconciliation, community integration, and century-scale development planning. He'll be presenting slides, and we'll have time for questions afterward. You can enter questions into the Q&A function of the Zoom. Michael, thank you for joining us, and please take it away.
Great. Thank you so much for having me. I've been looking forward to this conversation for quite a while. I always love telling the EBC story and also like hearing about other places that are contemplating similar development models or new ways of providing either revenue or directly providing housing. So I'm happy to tell the story today. So I'll just take a few minutes and walk through a few slides, and then happy to have a discussion about UBC's land development model. So I'm just going to bring up the presentation. There we go. And I think the first thing want to do is just set a little bit of context. And so on the western edge of Greater Vancouver lies the University of British Columbia. We have about 1,000 acres for both the academic campus as well as our residential neighborhoods. And one of the interesting facts about UBC is that it's not only a very large university, so we have about 60,000 students and about 18,000 employees across the 1,000 acres. It's not only a big academic institution, but it's also we call it a quasi-municipality. So it's not officially a city, but it has many municipal-like powers. And so during the day, there's about 80,000 people here on campus, and at night, about 30,000 are sleeping here. Yet we don't have a mayor and council, this is a highly unusual governance arrangement. Our land use plan, which governs how we use the land and is equivalent to, in some jurisdictions, they call it an official development plan or an official community plan. That's approved by the senior government here, the province, which is the equivalent of the state. So they provide oversight at that level. But within our land use plan, the Board of Governors and a number of designated bodies essentially run UBC like a city. And so that is provides enormous potential. And I think that model I'll describe today, while unique to UBC because of this governance arrangement, I think a number of the principles and features are being used in other jurisdictions, and can be ported to other jurisdictions if interested, maybe in slightly different ways. So we've just completed a new plan for the campus about 2 years ago. We call it Campus Vision 2050. And in that, it's providing the future directions for the physical place and accompanying our strategic plan for the university. And it encompasses all the elements you would find in any community's overall plan, but with a particular focus in this round on housing. And so I mentioned that there are 30,000 people sleeping here at night. So there's over 14,000 student beds on campus, and that's in the core of the campus, which I'm not sure if you can see my cursor, but in the core of the academic campus are our 14,000 student beds. And then we have 15,000 people that reside in the neighborhoods, as we call them, that are flanking the academic campus. And so in those neighborhoods, and we'll talk about that today because that drives our land development model, it's a mix of market housing as well as our version of non-market housing, which is discounted and faculty staff housing. And through 2050, we're going to see a population increase of probably 20 to 25,000. So a number of additional student housing units in the academic part of the campus, as well as almost 8 million square feet of future development potential in those residential neighborhoods that flank the campus. So just to kind of give a sense of in the context of our land development model before we get into the details, I mentioned that the province of British Columbia, so our equivalent of the state, does approve that overall land use plan. They also have a role to play when we sell land, either directly, which we don't do very often, or through leases. They also approve those leases as they are processed through the university up to the province. They do provide, the provincial government does provide some of the municipal services because we're not a city. So we have contracts for police and fire and those other kinds of things. The university creates, and my department creates lots of plans. So we created this new Campus Vision 2050. We create neighborhood plans and plans for the academic campus, and those are approved by the Board of Governors. We also have a regulatory function like a municipality, so all the permits and code compliance and enforcement that you'd find in a municipality. And we also de develop plans and provide uh, services or coordinate services for the residential neighborhoods. We actually have a residents association that is not just for advocacy, but actually plays a role having a budget and delivering community services in our residential neighborhoods. So turning to the land development side, the university is a sole shareholder of what's called UBC Properties Trust. And UBC Properties Trust is our master developer. And so they, in a sense, are governing our residential neighborhoods with regard to servicing. They follow our plans, but for the servicing of those residential neighborhoods. And really a core function is that they sell parcels, lots to the development market, so sub-developers will come in and buy lots, often in around the $100 million range. Those lots then are developed by a sub-developer, and then they are then sold to the market. And at the end of that process, the owner holds a lease with the university, and the properties trust and the sub-developer disappear, and the owner then has this contract with the university. What's a key feature of this arrangement is that those leases are prepaid. And so all that revenue, and I have a slide here in a moment that'll show you in more detail, all that revenue is generated up front and it is distributed from Properties Trust to the university annually. And so the university then puts all of that revenue into our endowment, and I'll show you in a moment how that money is used because it's then used for affordable housing and other purposes. And so if people are skeptical or cynical about this for-profit model, well, it's for-profit for a reason, and the profit's going into public goods and primarily affordable housing. The other role that Properties Trust plays for the university is that in those residential neighborhoods, they also develop and manage rental housing. And so we have a large rental housing portfolio aside from student housing in the neighborhoods, and much of that is provided at a discount for faculty and staff. So there's a number of units that are provided at an average of about 25% less for rental for faculty and staff. And we'll get into that in a moment a little more. The final role that we actually contract Properties Trust to build academic buildings, but that's just on a contract basis, and so that's more a transactional relationship with Properties Trust. Looking at the land development model in more detail. So I mentioned that we have all this residential floor space and the plans for the neighborhoods, 60% of that floor space is targeted for this leasehold arrangement I described. So this is the sale to sub-developers and then to the market and providing that the upfront revenue for the university that is then endowed. And 40% is rental, and three-quarters of that or so is for faculty, staff, and at a discounted rate. The next box to the right, under land development, you see that there's those 99-year leases, and that's the term for the leases. We're about 30 some years into the model. And so I don't think we'll be waiting for the full 99 years before we think of redevelopment. But at the end of the 99 years, in theory, the owner has the value of the improvement, so the unit, and the land goes back to the university. So as that deadline approaches, I think the reality is that we'll be negotiating with owners, buying back the units and looking at redevelopment scenarios, but we're still fairly early in the 99-year arc, so we haven't reached that point yet. I mentioned the rental housing for the UBC community as the second part of that model, which also creates revenue, which is also endowed, but mortgages have to be paid off first, so that's a little bit of a different and slower model in terms of that revenue being distributed to the university. And finally, under that land development model box, infrastructure and amenities. And so Properties Trust puts the basic servicing in the neighborhoods, but they also pay development charges to the university, which we use and this is like a typical municipal arrangement, using that money to provide pipes in the ground and other various services and amenities across the entire campus. But they do have a relationship to the neighborhoods, but it's provided across the entire campus. So all of that leads to the money that is remaining comes into the university and it's endowed, as I mentioned. So the third box over, the Trek endowment. So a little over $1.2 billion have been created to date that is being used for a number of purposes. And you can see the top one is student housing. And so what we do is that money is endowed and then it's used as a bank. And so the money is borrowed by student housing. They build the student housing projects. And then the revenue from students in those student housing projects goes to pay the loan back to the university. So the university is acting as an internal bank. And you can see the $606 million that have been used since 2012, and we've built several thousand beds with this model. And part of this motivation is that the provincial government doesn't let the university borrow. I'm not sure the arrangement in your state, but we're not allowed to borrow in the market. So the internal bank has been essential for delivering that student housing. The next box down, faculty housing. We use part of this revenue to provide a number of loan arrangements with faculty for retention and recruitment that allows them to get into what is one of the highest priced housing markets on the planet. And so it's been essential for retention and recruitment to provide loans, some of them forgivable, most of them not. And I think it's different than in the US, where you have to pay taxable benefits when you're given these kinds of benefits in the Canadian context. So it's something that it's a help, but it's not probably the amount of leverage you can get out of providing that kind of assistance that you have in some US universities. And there's a variety of other investments that are used by that land endowment funding, often used and invested in the markets. Now, all of these different investments, also the final box to the right, also yield annual dividends, if you will. And so we use the dividends from those investments for academic programs. And you can see the breakdown on the right. Academic programs, student financial support, academic capital projects, and then we have a rent geared to income housing program for low-income staff on campus. And so it's a small program, but it's just off the ground about 5 years ago or so and becoming more popular. So that's the model in a nutshell, and it's been something that's worked really well. It's also, if you think about the underlying land economics in Vancouver, we've benefited from it being one of the most expensive places on the planet because we're able to harvest the revenue and endow that through this model, and it may be similar to what you're experiencing in Hawaii, and the potential benefits may be similar to what you're experiencing in Hawaii. Just to go into a little bit more detail on the leasehold aspect, because that's where the majority of the revenue I mentioned comes from. And so when Properties Trust, they sell these leases to a subdeveloper, and that prepaid lease is provided that revenue to the university. It follows the model here where, as I mentioned, the Board of Governors is providing the framework that all this happens within. So the plans we develop, the Board of Governors adopt, and it dictates the kind of uses and heights and distribution of amenities and all of that you'd find in a typical community plan. Properties Trust, as I mentioned, they play the central role and they're the master developer. So they service the sites, they subdivide them, get approval from the province to subdivide, they follow our neighborhood plans, and then they also provide the basic amenities in the neighborhood in the initial phase. So we want to front end load a lot of the amenities and services because this has been a really important feature is that people that are coming here not to buy land freehold, but under leasehold, you've got to make it really attractive. And so a lot of money is spent up front in playgrounds, community amenities, the community center, childcare facilities, landscape, parks. All of this is front end loaded in the model because it makes it and adds value. It makes it more attractive for the leasehold purchase, but also makes it it creates a value for the folks that are actually buying units out here. And then on the right, you can see under the 99-year lease model, that's the what I described where Properties Trust has that ground lease and then shares that with a third-party developer. And and then from there, the lot, if you will, the unit sold to the market, and it's the far right, the lot lease. And at the end of the day, that's a contract from with the eventual owner and UBC itself. And so, as I said, Properties Trust disappears from that arrangement, and so does the sub developer. And then finally, in the bottom right, I mentioned that the Properties Trust plays this important role in managing rental, developing and managing rental in the neighborhoods. And one other comment I'll make on that is that it gives being the landlord in these neighborhoods and all of that floor space, it gives Properties Trust an amazing opportunity to be the central curator of the retail experience, the commercial experience, the public realm experience, which is if it's done well, is very powerful. So when you visit our neighborhoods, it's very much a complete community concept with very carefully selected tenants and a range of services to make sure it's the complete community feel that we've articulated in our plans. And so in that way, uh, it is a bit unusual in that you've got a single landowner making these decisions rather than a variety of and piecemeal landowners in like a municipal context. So I think with that, I'm going to stop my slideshow and then open it up for questions and comment.
Great. Thank you so much for that presentation, Michael. That was really enlightening and very, very interesting to us. So again, as a reminder, you can enter questions into the Q&A function of the Zoom. I'll get started with a question that I think is on everyone's mind here in Hawaii. So we often struggle with the question of who housing is for. Is it for local people who need it the most, or is it for people who can afford it, who are often wealthy overseas investors? And we've all heard the criticism that some of the more newly developed neighborhoods at our market rate in Hawaii are, dark at night because no one's actually living there. Is that an issue that you've addressed in Vancouver? And how is your relationship to that question of locals versus outsiders and low cost versus market rate?
Yeah, thanks for the question. It's been pretty fundamental in Vancouver, and I say this in Vancouver in general, that has been a big issue. There's been major developments for the last 30, 40 years that really have been marketed to overseas investors and have provided a lot of revenue for Greater Vancouver, but at the same time has created these questions of absentee tenancies and the impact it has on community building. And so I'll speak for UBC. There's other actions that have taken place in Greater Vancouver and in the province of British Columbia to restrict vacant units, if you will. And so there's a variety of taxes that have been imposed to curtail that, which are having effect. At UBC, we've been monitoring, looking at data through the electrical usage in units to see if this is one way you can do it, to see if units are actually left vacant on extended periods. We actually found it was pretty low. It was around the 7% range. So the units were being used. We think in a lot of cases, even if they're investor owned, they have been sub-tenanted or they've been subletted to the market. A lot of students are looking for housing, and there's been an opportunity for that revenue stream for the absentee owners. So that's probably why that we have had a fairly low vacancy rate, if you will. The other thing we've done, though, because there has been growing concern about access and affordability to housing here, like many places, we increased the proportion of rental housing in the neighborhoods. So we've increased it up to 40%, as you saw on one of those previous slides. It was initially 20, now we've moved it to 30, and now up to 40. And that's very deliberate, and that's part of the way of answering this question is that we've slightly reduced more than slightly over time, that amount of leasehold housing, because we want to create more opportunities for rental housing, which is more accessible. And also, we provide that discounted portfolio of rental housing to faculty and staff, which are, as I said, averaged 25% off of market rates. And so we have been addressing that question through that increase of rental housing, which it means in UBC's case, our target community for that type of housing has been faculty and staff. And so in that rental portfolio. So just recently, we're now expanding that to other employees who work out here that are not affiliated with the university. And so, with our growing neighborhoods, there's a lot of services, a lot of workers that we now want to also provide the opportunity for housing. It's going to be initially at market rate, but we're giving them for the first time access to that restricted portfolio of rental housing. So the discounted part is still focused on faculty and staff. So it's different in that way from a typical community because we haven't yet delivered true, deeply affordable non-market housing for the general public.
So, speaking of the affordability, are the leasehold properties more affordable than comparable fee simple properties, either in the same neighborhood or elsewhere?
Well, this has been one of the remarkable outcomes. Our leasehold units either compete at the same or just slightly below fee simple across Vancouver, which is remarkable. I think it shows the demand there has been for housing and also the quality of the community that we're trying to build. That people are paying in a way a premium, but the experience we hope is worth that. And so it's proved out that in fact that the market will bear near market or at market leasehold payments, which has been a pleasant surprise to all of us. But I think if your ingredients are similar, where you've got high demand and high amenity and high value areas, you may experience the same thing. We have a satellite campus in what we call the Okanagan, which is about a 4.5 hour drive in a community away in a community of about 200,000 people. And we're just starting some residential neighborhoods there at our campus. And we have about 12,000 students on that campus. And we're just starting residential neighborhoods. And because of the nature of that market, we're not going to start with leasehold. It's going to be rental housing because we've tested it and leasehold cannot command those prices that we get in Vancouver as it compares to fee simple. So, but that's been the experience of the campus in Vancouver.
Okay, great. Um, so for the faculty housing, I think you mentioned earlier that UBC was the lender for the faculty to purchase those leasehold units. Have faculty been able to get mortgages from commercial banks on leasehold properties?
Yes. So, and those loans are actually not restricted to the campus. They can use that anywhere in Greater Vancouver. And yes, they can get loans. And so, I think I guess after doing this for so many years and the kind of low amount of risk associated with these units, it has not been an issue for faculty getting loans from the banks.
Another follow-up on the leases. Are there any affordability covenants in the leases? Do you plan to introduce any affordability covenants?
We do not. These go strictly to market and then float at market rates. And right now, have that has not been contemplated. I think we're trying to provide the affordability angle mostly through the rental rental housing. There have been some pilot projects in the past of co-development with faculty on campus, where the university is providing the land and then partnering in the development with faculty. The issue, though, again, is that faculty have to pay taxable benefits in Canada, so through income tax. So that kind of curtails any kind of windfall gain that can be provided to faculty in those co-development arrangements. So it's been pretty simple. We got the leasehold and then a variety of financial supports for ownership and then the rental housing stock, but we haven't contemplated anything beyond that.
So once a leasehold unit is sold, it can then be resold in the secondary market. You were talking earlier about how the new leasehold condos are not significantly cheaper than the fee simple ones. Once they are sold in the secondary market, do they follow a similar pattern to fee simple? Have you seen them maybe appreciate less quickly over time than a fee simple property? And if not, do you anticipate that as the 99-year deadline draws closer, that maybe they'll start trading for significantly less than comparable fee simple properties?
Yes, I think that is an expectation over time. There are some other examples in Greater Vancouver that had, I think they were 66-year terms, and they are coming near due, and that has been the arc in the last, say, 15, 20 years that those are coming down substantially. So that will be a reality, and I think it goes to my earlier comment that before we get to a point where this really starts to be a dramatic issue, is that the university would likely engage with owners about a reacquisition and the opportunity to redevelop some of these neighborhoods. And the early neighborhoods were at lower densities, and we've been every generation probably similar in Hawaii. Every generation's been building denser. And so it does provide the opportunity as the decades roll on that we would look at reacquisition and a redevelopment scenario. So buy out existing owners and then know that there's going to be future upside in the redevelopment because those neighborhoods eventually would be getting denser.
So we're all familiar that the real estate market follows a boom bust cycle. And so maybe about 4 or 5 years ago, in Vancouver, as happened in Hawaii, there was a global surge in the property markets. And leasehold and other just condos, property in general, will sell for a high price. Other times, like now, maybe there's a bit of a bust and the market is much softer, much less demand. Um, your revenue then also, does it also follow this up and down cycle? And if so, how do you folks account for the soft periods?
Yeah, so on the university side, the Treasury Department models out different scenarios, and you're quite right. There was a period where I think Properties Trust was getting over $500 as a buildable foot when they were selling these sites. That's come down. It's probably under $400 now. And what's interesting is, I guess part of the answer is what's interesting is given the track record UBC has had, some of these sub developers, even in a very soft market right now, are still buying the sites from Properties Trust, which is amazing. And they're still able to move those forward because there's still demand and there's still a good investment opportunity because there is such high demand even for rental housing. So an investor, knowing that there's students here that we've got almost 60,000 students, that there is going to be demand. They're still in their development pro forma, I think, value in still developing these sites. So it's definitely softened, but Properties Trust is still thankfully selling sites at a little slower pace, of course, and for less. On the university side, yeah, the Treasury Department does model out what some ranges to know that it can fluctuate over time. We've been pretty lucky over the last 3 decades, and you've probably seen, I mean, lucky in some regards because it's been valued at the university, but then it creates the opposite problem, which is the opposing problem, which is that it's difficult to access the market and unaffordability becomes a big issue. Having said all that, yeah, the Treasury Department does model out different scenarios for that revenue.
Okay, we have another follow-up question about the leasehold properties. Can they be inherited if someone passes away? And also, what does the monthly maintenance fee look like? How rapidly does it increase over time?
Yeah, so they float. They're transacted in the market like any other unit. So it can be inherited, it can be sold. There are obviously a number of provisions in a lease with the university, but in terms of ability to resell, yeah, no, um, that's not an issue. And the what was the second part of the question, Stanley?
The maintenance fees,
Oh,
how
maintenance
do
fee.
they
Yes.
change over time?
So it's they're strata titled buildings, and so they're very similar to what you'd find in any other strata titled. I'm not sure if you use the same term, but common ownership and so the buildings are governed through common ownership, common property, and the fees that are associated with that are very similar to what you'd pay in a condominium in Vancouver. So they've all been increasing in the region, and it would be very similar benchmarks for UBC in terms of what those are.
You were talking about the sales prices earlier. Can you talk about the cost of construction in Vancouver? About how much per square foot is it?
That is a good question. I should know that number off the top of my head. So it accelerated significantly through the pandemic, and to give you a sense on the academic side, which I'm a little more familiar with, depending on the type of academic projects, but r ranging from 600 to $900 a square foot, depending on the type of project, would be not unheard of for some of the more recent academic projects. Uh, I want to say closer to 300 for residential, but I'd have to double check that with Properties Trust because I don't want to misspeak.
Got it. So if the sub-developer is buying for $500 a square foot and then adding another $600, say, then they have to sell for significantly more than $1,100 a square foot in order to realize a profit on their investment, right?
Yeah, so I think in the residential, as I said, it's probably closer to 300 a square foot, but I'd have to double check that. But regardless, the leasehold rates in the market, and we've seen this across Greater Vancouver, well over $1,200 a square foot for sales, and I think even north of that in recent years. So it properties have been trading at a premium. Now they're all coming off over the last year. The market is softening, but that's what we had been seeing in the previous years.
So it would be like $1 million for a thousand square foot condo, roughly.
Yep, I think that would probably be, in fact, more expensive than that, probably. It'd probably be the 1.2, 1.3.
Yeah, so that's not cheap.
No, and so again, that it's been a big it's a benefit for the university and a big problem for all the communities in greater Vancouver. And we've all been struggling with it. I think there's a lot of cities that are struggling with the same issue, and Vancouver's no different.
So you talked about this model where you have UBC, you have the Properties Trust, which is wholly owned by UBC, but sounds like a private corporation, legally speaking. How much of the work is is performed by UBC and the Properties Trust as opposed to the subdevelopers, contractors, and that sort of thing? Do you have more internal capacity than other, public agencies, landowning agencies?
It's a great question. I would say yes. So from on the planning side, all the upstream plans and policies, guidelines, development permitting and compliance and enforcement, that's all conducted through the university in my department. And on the properties trust side, they're providing all the pre-service sites and the basic amenities in the neighborhoods. And then on an ongoing basis, the university and or properties trust or our residents association, depending on the area, we're providing all of the operations and maintenance for public spaces. So when it comes to the sub-developers, they're really focused solely on their sites. Now they do pay. So in terms of the development charges I mentioned earlier, the way our model works, to make it easy for the sub-developers, Properties Trust pays the big development cost charge to the university. We call them infrastructure impact charges, but it's our made-up term here. Um, the Properties Trust pays that to the university so that the subdeveloper, all they have to worry about is a very small community amenity charge of around $6 a square foot. And that money is used for community facilities on top of the basic infrastructure that Properties Trust provides at the very beginning of the development. So it's simplified, and that revenue is really important for providing all of the amenities and services I've been talking about. And but what it does, it makes it very simple. So the subdeveloper is negotiating that prepaid lease with Properties Trust, and then the only charge they have on top of that. There are other regional development charges, but in terms of UBC, what we take, it's that small community amenity charge from the subdeveloper.
So how much land do you folks have? How many more years or decades of this type of development can you sustain?
Well, so we went through this planning process I described called Campus Vision a few years ago, and that was meant to do a lot of things, like any community plan, but it was meant to increase housing capacity as one of the central features. And so through that, we now have 8 million in the residential neighborhoods that flank the campus. We have 8 million square feet of floor space that Properties Trust can work with, and that's probably enough supply for at least 20 to 30 years based on the pace of development. There's still opportunities to densify other areas of campus that, as we do future reviews of our plan, that we could go to the province and ask for rezonings and increase that capacity. But we have a good supply of land, and 8 million square feet will last Properties Trust quite a while to provide the housing and the revenue that we've been talking about today. And then in the academic campus, we have a fair bit of land available for student housing growth, and that's as I said earlier, a university endeavor. We get Properties Trust to build them, but these are university buildings and financed internally by the university. And we have 14,000 beds or so now, and we have plans to add about 3,700 more over the next 15, 15 years, plus or minus. And so there's capacity on the academic side for that type of housing growth as well.
How unique is this model in Canada? You have a very strong housing market in Vancouver, and I guess you got lucky with a large parcel and a really great location. But
Yes.
your peers in other provinces, are they able to capture this large, upside when developing housing, or is it are other housing markets not as strong in other provinces and other cities?
Varying degrees. So I think in some of the larger Canadian cities, so Toronto and Montreal, it depends if the university owned the land early enough. Because everybody, it seems like most institutions are looking at some sort of in the tough housing market, some sort of use of their land for this kind of benefit. In other cases where there is a lot of land and there's a lot of institutions that have been visiting in the last decade, and they are launching properties trusts of their own to varying degrees. They are trying to follow a very similar model. And so there's lots of universities that do have in the mid-sized Canadian cities access. So whether that be Calgary or in Saskatoon, there's mid-sized Canadian cities that are doing this that have large tracts of land. The flip side though is in those mid-sized cities they don't have the same they have pressure, not the same pressure, and they also don't have the demand that you have in the larger cities. And so as you said, here in Vancouver, we kind of hit it right with we have 1,000 acres, a large plot in a prime piece of real estate on a peninsula overlooking the ocean facing west. And so having that early, over 100 years, having that for over 100 years gives us the benefit of really leveraging the land for that. Whereas in some of the urban centers, it depends when the university comes into ownership of the land.
So again, people can enter questions into the Q&A feature, and while you're doing so, maybe just a broader question about the Vancouver housing market. As you mentioned, it is one of the most expensive housing markets in the world. It's up there with Hong Kong, with other major cities, and yet Vancouver does not have the tech salaries of San Francisco or the finance salaries of New York. So just on a broader picture, how are people able to afford these million plus dollar condos?
Yeah, no, I mean, it was rightly described as a crisis a few years ago because to your very point, the on the income side, it doesn't match. And so there's a number of restrictions that came in around foreign ownership, as I mentioned, and I think that's starting to make a difference. There's also been a massive push for the you can call it inclusionary zoning, so inclusion of non-market and more affordable housing and developments, as well as a big push in subsidization for rental housing. And so through all of these different approaches, it's been attempted to try to make a dent. And it is, I mean, it's slow, but it is. Rents in Vancouver, I've been hearing recently, have come off about 10%. And so it does, and home values have decreased 5 to 10% in many of the areas in the last year alone. So it does. Now, this is timed with an economic downturn, so it's hard to say what happens when assuming the economy does turn around, what will be the case. The other dimension to this, which we haven't talked about, is we're focused on housing today, but the other really important companion issue for people is transportation. And in a region that is quite congested and doesn't have, we have a different model. And if any of you have visited Vancouver or other Canadian cities, is not the same investment in freeways, and that's by intention. So they create much more compact, walkable cities, but then you end up with very congested cities, and you need major investments in transit and rapid transit. And so one of the biggest priorities for the university right now, in addition to all these housing initiatives we've been talking about, is to extend rapid transit out to the university. And so that's been a huge issue in our community, and it's something that we've been working aggressively on to provide a connection between the university, which is going to have all kinds of economic and broader connectivity benefits, but also open up the housing ecosystem in the region. And so, whenever we talk about housing, we always talk about transportation and how these things need to come together in terms of investments and making sure that you're providing. In our case, there's about 80,000 trips a day on transit already. There's 1,000 buses per day that come through UBC, if you can believe it. So we've got a massive demand for transit, and we're now working really hard to extend rapid transit. And then around the stations, and probably as you've seen in Honolulu and other places, take advantage of those station areas to provide transit-oriented development, which is a big theme at UBC. It's been a huge theme in Vancouver. If you fly over Vancouver and you see the rapid transit network, you'll see massive nodes of density and towers at every station location. There's some debate about whether that's a good urban design form of development and urban design, but nonetheless, it is providing access to transit and ability to get around the region. And so that's why we're trying so hard to get the rapid transit line extended. It's about what is it in miles? 7 kilometers, whatever 7 kilometers is in miles, is what we're working on right now to have the rapid transit system extend to the university. And our pitch is when we're trying to get investment from senior government is that through that 7 kilometer corridor, you could enable over 50,000 units of housing because it travels through the city of Vancouver, another jurisdiction that is primarily owned by a local First Nation, the Musqueam First Nation, Musqueam Indian Band, and then UBC. And so all three of us are very keen to see rapid transit extended so that we can enable these 50,000 plus units of housing through the corridor.
From the chat, we have more questions. Are there any restrictions on who can buy? Are foreign investors entirely free to buy just as much as a local owner occupant? Are there any deed restrictions whatsoever on owner occupancy? And then also relatedly, how many of these buyers are first-time buyers versus, say, people who are moving up the ladder or downsizing?
Yeah, I don't have data on the last question, but from anecdotal evidence, it is a mix. There are no deed restrictions, but what there are is this introduction of different taxes on foreign ownership in recent years from different levels of government, and so fairly punitive if you're, especially if they're vacant units, fairly punitive. So it has changed the dynamic, the restrictions on foreign ownership and the taxes on foreign ownership I don't think it's as extreme as some countries like New Zealand and others, but it has made a dent. And what it's done is it has that in combination with those other factors I talked about. I think it is having an impact in bringing down unit prices and rents in the region.
Okay, great. Well, we've covered a ton of ground today. So I really appreciate your presentation and answering so many questions from me and from our audience today. I just think it's such an interesting model that you have that I think is one of the biggest um, unseen barriers holding back our country, the United States. This idea that the government is not allowed to make a profit, which I think is a sort of a even though few people have articulated that, it's a kind of a background understanding that everyone has. On the right in the United States, you have a movement that wants low taxes, small government, few services. On the left, you want large government, lots of services, but also higher taxes. And I think what UBC is showing is that there's actually a third way.
Yes.
Public entities like UBC can raise revenue through other sources other than raising tuitions, other than raising fees, can raise revenue through profit, through being run like a business, namely finding, niches in the market that can be filled with good quality products at a price that might be high, but certainly the buyers think it's, an attractive price or a fair price, and thereby deliver a really fantastic public service that would not otherwise be funded as well as it is today. So, um, I'm cautiously optimistic that in these days, the narrative is shifting a little bit, where there are like the Intel deal, where the federal government has actually acquired a large stake in Intel in exchange for the $9 billion it's providing. Nippon Steel had to turn over a golden share in exchange for its acquisition of U.S. Steel. And I don't know if we'll get there fully in the way that maybe a more mature system like a Singapore or Hong Kong with trillion-dollar net sovereign wealth funds. But
Yeah.
I think on a micro level, a UBC model is very transplantable to a state level entity like the University of Hawaii.
Yeah, well, I think absolutely. And just to that point, it is a bit of a public-private hybrid because Properties Trust operates essentially as a private company, even though the revenue is distributed to the university. So it is a bit of a hybrid. And so happy to have any further conversations about how those elements of that could be ported over to Hawaii.
We are in the very early stages right now, so hopefully in a few years you'll be able to come visit and see what progress we've made.
That would be great.
All right, thank you so much, Michael, for joining us today, and thank you to everybody online who's joined us today. We look forward to continuing the conversation about successful housing models around the world through this Our Home series, and stay tuned for future webinar announcements. Thank you, and again, stay safe and dry, everyone.
Thank you.